Good day, everybody. Jeffrey Beamer here, senior investment strategist over at ewotrading.com. Welcome to our Pro Trader Tips for today. We are looking at this is in our Delta Neutral Income portfolio, and this is a portfolio where we try to just generate a little bit of income each and every month and just keep churning right along, right along, right along. And some of our trades do deal with earnings, and we are on the backside of earnings season right now. We're in that little bit of a lull season, but there's still great opportunities out there each and every day. So today we're looking at trade ID 1273. Again, this is on Micron Technologies. The stock symbol there is M as in Michael, U as in unicorn. So MU is the symbol. This was an iron condor. We did a trade that lasted 8 days. And you can see there the results are, well, definitely in the green zone. So let's take a look and see how this trade panned out. So we sent out the entry on September 24th, and this was an earnings related trade. What we anticipated was that Micron Technology would move a certain percentage through the earnings event, under 10%. Okay. Typically it moves, I believe, if I remember correctly, it's around 4 or 5% through earnings. And that's all we're concerned about. You can see a little bit of the stock chart here where this big drop and then it bounced and it's bouncing around. And I'm not really concerned with all that. What I'm looking for is just through that earnings event, because something called implied volatility is going to be really elevated, making options very pricey. And we want to sell that premium and take in a credit and then after the earnings event, that IV will what we call crush. So it'll drop, which in our language is crush. And then that will make the options less expensive and we can buy them back cheaper. All right. So let's go up into the earnings announcement, because on this particular trade, after we sent out the alert, this was for a $1.38 credit. So $138 each and every spread you did on this, you took in $138. And then 2 days later on the 26th, I sent out a update to this because, as you can see here, look at this, Micron Technology, it didn't move that 4 or 5%. It moved over 13%, 13.5%. In fact, during the day, it was up over 15%. It did pull back on the day and got and closed higher by 13.58%. Now, two things happen here. You could panic and exit the trade, and you would have exited at a loss. The loss at this particular time was $110 per spread. So no, it was not the max risk of $362. It was just a loss of $110 at the time. But my analysis was that we would actually get a little bit of retracement. And fortunately for us, one of the companies that is in the sector, so not Micron Technology, but a company within the sector called Sun Microsystems, we got word that the feds were walking in their front door and they were under investigation for some accounting issues, or we'll keep it broad like that, okay? And that sent the whole sector down the next day, okay? So that had me want to stay with the trade, and that's what I wrote here in our update for our subscribers who subscribe to Delta Neutral Income, and essentially that we are expecting a further pullback and no action was necessary at the time. And so what we did was actually this morning, just today, we sent out the exit alert, because if you look at the stock chart here, take a look at this. So after the big gap that you see here, the next day, the red candle, that was the news about Sun Micro coming out. And then look at this, the stock just decided to drop, start to fill that gap that it had created. And look where it is, right into the profit zone. Now, we could wait a couple of days to see if we could get the maximum reward, because if it stays where it is right here, then we have maximum where we don't have to do anything. We get to keep the entire credit that we receive. But what I decided to do this morning was send out an alert saying, hey, let's buy this back. We've got a majority well over 80% of the maximum reward. Let's go ahead and take this trade off. Okay, our patience has paid off, and the stock, dropped into our profit zone. So for 19 cents, we bought that back. We sold it for $1.38. We bought it back for 19 cents. That generated a profit of $119, which is a 32.87% return in just 8 days. Now, I know we have some pretty high returns in 2 or 3 days, but some of these take a little bit of time. So your lesson here on our edition of Pro Trader Tips is that your original prognosis, especially if you've been around like I have, I know that my original prognosis usually works out. And by being patient and staying with the trade, that we will often benefit from that, staying with our original decision. So analyze your trades, keep track of the results, and see if your original prognosis works out. And if it does on a consistent basis, then you can add that to your trading plan. So that's your Pro Trader tip for today. Everyone have a great trading week, and we'll come to you again next week. Take care.